Hello everyone, welcome back to our channel. Today, we're going to talk about an important topic in FABM 2, adjusting entries. So what are adjusting entries? Adjusting entries are made because cash and business activities do not always happen at the same time. Adjusting entries make sure that income and expenses are recorded in the correct period. There are 6 common adjusting entries we need to learn in FABM 2. Prepayments, accrued income, deferrals, bad debts expense, accrued expense, and last, depreciation expense. Let's discuss them one by one.
Prepayments, prepaid expense. Scenario: Zobel Company paid 24,000 on October 1, 2025 for 1 year of rent. At the time of payment, it was recorded as prepaid rent. Simple explanation: prepayments happen when we pay cash first, but we use the service or item little by little. Since rent helps the business operate, the part already used becomes an expense. Step-by-step thinking. Total rent paid 24,000 pesos, covers 12 months, monthly rent 2,000 pesos, used from October to December 3 months. 2,000 pesos times 3 is equal to 6,000 pesos. Only 6,000 pesos has been used in 2025. Adjusting entry, December 31, 2025. Rent expense, debit 6,000 pesos, prepaid rent, credit 6,000 pesos to record prepaid rent. Prepaid expenses starts as assets. We move part of the asset to expense as it is used.
And here's a simple explanation. Deferrals happen when we receive cash first, but we haven't earned all the revenue yet. Unearned revenue is like a promise to deliver goods or services in the future. So even if the company already has the money, it cannot record it as a income yet until the service is done.
Here are some important reminders. Unearned revenue is a liability, not income. We recognize revenue only when it is earned, not when cash is received.
For our example, here's our scenario. Zubel Company received a 30,000 pesos on November 1, 2025 for a 3-month coffee supply service. The company recorded it as unearned revenue.
Let's solve it step by step. The total payment is 30,000 pesos. The service period is 3 months. To get the monthly revenue, we divide 30,000 pesos by 3 months. That gives us 10,000 pesos per month. From November to December, 2 months of service were already provided. So, 10,000 pesos times 2 months equals 20,000 pesos of earned revenue. Since 20,000 is already earned, we need to adjust the accounts. We debit unearned revenue 20,000 pesos to decrease the liability. We credit service revenue 20,000 pesos to recognize the income. To record earned service revenue for 2 months. This entry shows that part of the unearned revenue is now earned.
Let's proceed to accrued expense. Accrued expense are the expenses for goods or services that have already been used or incurred but have not yet been paid. Like for example, electricity bills, water bills, interest on loans, and employees' salaries. And take note guys, that expenses are recorded when they are incurred or used, not when they are paid. And payable means we still owe a money or the business still owe a money. To properly recognize these expenses, we record an adjusting entry. And for you to understand more, we will give you an example.
So, here's the given example. Zubel Company received a Meralco bill amounting 67,891 on December 31, 2025. Payment will be made in January 2026. So our adjusting entries will be utilities expense debit 67,891, credit utilities payable 67,891 pesos to record unpaid utilities for the month.
And for the accrued income happens when we earn revenue now but receive cash later. If the service or goods are already delivered, the income belongs to this year. Accrued income is an income already earned but were not collected nor recorded. This is where the service were already performed for the customer, so we call it the service income, but the payment were not yet collected or recorded. So for our scenario, we have the Zobel company delivered coffee beans worth 18,000 pesos on December 29, 2025, but will collect the payment in January 2026. So our adjusting entry would be accounts receivable debit 18,000 pesos and sales revenue credit 18,000 pesos to record accrued sales of coffee beans. This adjusting entry is recorded because the coffee beans were already delivered in December 2025, which means the revenue has already been earned, even though the cash will be collected in January 2026. Under the accrual basis of accounting, income must be recorded in the period when it is earned, not when the cash is received. Therefore, accounts receivable is debited to recognize the customer's obligation to pay, and sales revenue is credited to record the income that belongs to the year 2025. This ensures that the company's financial statements correctly show the revenue and assets for the period.
What are bad debts? Bad debts refer to amounts owed by the customers that a business expects will not be collected. These usually happen when customers fail to pay their credit purchases despite reminders and follow-ups. Since businesses sell on credit, there is always a risk that some customers will not pay. Accounting records this risk properly to avoid overstating income. In problem number 1, Zobel Company sold 100,000 pesos worth of espresso beans on credit to several customers. Based on past experience, City Cafe is unable to pay 25,000 of its debt. Because history shows that City Cafe usually skips payments, the company can already estimate the amount that will become uncollectible. Journal entry. To record this expected loss, we debit bad debts expense and credit allowance for bad debts for 25,000 pesos. Bad debts expense is debited because it is an expense that reduces income. Allowance for bad debts is credited because it is a contra-asset account that reduces accounts receivable.
Problem number 2. Given situation. In problem number 2, the business already confirmed that the customer's 3,000 pesos account is uncollectible. Unlike problem number 1, this is no longer an estimate. The account is now proven to be impossible to collect.
Journal entry. Journal entry. To write off the uncollectible accounts, we debit uncollectible accounts and credit allowance for uncollectible accounts for 3,000 pesos.
This entry removes the customer's balance without affecting expenses again, since the expense was already recorded earlier. In conclusion, recording bad debts ensure that financial statements are accurate and realistic. It helps businesses prepare from credit risk and maintain reliable accounting records.
Depreciation means spreading the cost of an asset over the years it is used. The equipment helps the business every year, so its cost should be recorded a little at a time. We do not depreciate the full cost because part of it, called the salvage value, will still be left at the end. Here are some beginner reminders. Always subtract salvage value first, Depreciation expense is debited because it is a cost. Accumulated depreciation is credited because it reduces the asset and never credit the equipment account directly. Now we move on to depreciation expense. Our scenario is that on January 1, 2023, the Bell Company purchased office equipment for 300,000 pesos. The useful life is 5 years and the salvage value is 50,000 pesos. Step 1. Compute the depreciable cost. We get the depreciable cost by subtracting the cost of the asset and the salvage value. So the formula is depreciable cost equals to cost minus salvage value. We have 300,000 pesos minus 50,000 pesos is equals to 250,000 pesos. 250,000 pesos is the total amount that will be expensed over the equipment's life. Step 2. Compute annual depreciation. We get the annual depreciation by dividing the depreciable cost we got earlier by the estimated useful life. So the formula is annual depreciation equals to depreciable cost divided by useful life. We got 250,000 pesos divided by 5 years is equals to 50,000 pesos per year. This means the equipment loses 50,000 pesos of value every year. When doing the journal entry for depreciation expense, the standard format is debit depreciation expense dash asset name, credit accumulated depreciation dash asset name, to record depreciation expense for asset name. From the computation we did earlier, our journal entry should be debit 50,000 pesos depreciation expense dash office equipment, credit 50,000 pesos accumulated depreciation dash office equipment to record depreciation expense for office equipment.
And that's all about adjusting entries. We hope you gain more knowledge and learn the adjusting entries from us in the simplest way. Thank you for watching!